As many of you certainly recall, and as Minister Gramegna just mentioned, it was at the Stock Exchange Day back in 2016 that the world's first and now leading platform dedicated exclusively to sustainable finance was announced. And that is the Luxembourg Green Exchange. Among the speakers at this unforgettable moment was Sean Kidney, the CEO of the Climate Bonds Initiative, a not-for-profit organization working to mobilize the $100 trillion bond market for climate change solutions. And I am delighted to introduce to you Justine Leigh-Bell, who's the Deputy CEO of Climate Bonds Initiative. She will review what has happened over the past 5 years in the sustainable finance sphere, and she will draw us a picture of what we can expect next. And Justine, it is a great pleasure to have you with us today.
Thank you, Natalie. It's such a pleasure to be here, and I want to thank the Luxembourg Stock Exchange for inviting me to speak on their special day. I can't believe that it has been 5 years since the launch of the Green Exchange, where Sean Kidney gave his very powerful speech on the climate crisis, the urgency of climate change, and how sustainable finance will play such a critical role in helping us to move the capital we need to be able to address this challenge. Now, of course, we've seen a lot happen in 5 years, and this is not enough time to go through it all, but there are some key themes that CBI deems as worth noting on what has happened. Now, of course, we can't speak about sustainable finance without saying or talking about green bonds. You know, a market that has now hit over $1 trillion of USD issuance to date for labeled green bonds. It has really been exceeded all expectations. On the back of that, we've also seen a plethora of different labeled products coming into market, whether that be social, whether that be sustainability, or the sustainability-linked bonds and loans, which are holding a lot of promise for opening up the market and creating opportunities for stronger commitments and achieving milestones set on sustainable finance investments and goals. So we are very pleased to see that. Now, of course, one cannot go without mentioning the EU Action Plan on Sustainable Finance, another huge development that has had a knock-on effect around the world in the sense that the taxonomy, the EU Sustainable Finance Taxonomy, gaining headway in the European market, setting direction for what is to help the EU countries meet their climate commitments and creating an understanding of the investment requirements. The taxonomy has had an influence in other countries where many countries are stepping up to develop their own national taxonomies on the back of this leadership. And of course, China with their green catalog and working closely with the EU on trying to harmonize those efforts so that green capital flows can be exchanged amongst the two. So quite a lot happening in that space that has also brought central banks and other regulators to the table on understanding what role they play in this market, and especially the commitments that we've been seeing, especially in the last year or two from central banks on their need to address climate risk, understand how to measure this, that can have an effect into our financial system to make sure that it is one fit for purpose. So this has all been, from CBI's perspective, very exciting. Of course, the rise of sovereigns, and sovereign issuance really made its debut in 2017 with France, followed by emerging markets in Nigeria, Fiji. We've even seen out of Chile. The list goes on. We have 20 plus sovereign issuances to date, with totaling around 96 billion. This is very, very good to see, because what it says is governments have clearly understood that they will need to be able to leverage private capital to be able to address their own climate action plans and policies. In order for them to achieve their targets, they are going to need a significant amount of capital to do so, and have recognized that the labeled debt market is one way that they can do that. So CBI has always seen that it is really important that governments step up and act. And the leadership that we've seen out of the EU, followed by other countries around the world starting to take notice and starting to take steps in that direction, leaves us very encouraged. Of course, the stock exchanges roles that they've been playing has developed into transparency and disclosure, paying a lot of attention to putting in place platforms that help to encourage this. I think that we'll see a lot of emphasis around data in the coming years. Data quality, the ability to collect and report on data so that we are knowing that we are meeting our commitments through these investments. So I think that data is something that through the transparency and disclosure platforms, through the work of the stock exchanges like the Luxembourg Stock Exchange, through the Green Exchange and platform developments, this will be something that others will follow. And I think it will be an important part of the market infrastructure that will be required. Of course, looking ahead and what we have before us is also very exciting and encouraging. Green bonds, I think, will continue to push boundaries and push numbers. And I think pricing will also be much clearer. A lot of discussion on the price benefit that green bonds are showing in the market gives us the encouragement that we are starting to see potentially cheaper sources of capital for going green. Now, of course, with the whole developments of the COVID crisis last year, that, of course, put social and sustainability front and center as well. And so investments were going into that direction. With over 300 billion of US issuance to date, USD issuance to date on social and sustainability, it's clear that investors are looking for a lot more when it comes to meeting their ESG mandates. And these types of products are definitely giving them that option. But then, of course, there's the discussion around resilience, another thing that, a theme that the COVID crisis has taught us, that we need to ensure that our investments are achieving economic, social, and environmental resilience. So what we mean by resilience is the work ahead, working out the definitional work behind that so it's more clear to the market on what we mean by resilience. Of course, linking that into the SDG framework. If we think about what all of these investments can start to contribute to collectively, is helping us to achieve our sustainable development goals. So that will be another area that I think in the decade ahead we will be seeing more of. But of course, one has to mention transitions. I think in the last year, transition has been front and center. Last year, CBI published its credible climate transitions finance paper, a positioning paper that is trying to get a better understanding of what we mean by transition, ensuring that this does not come to the sacrifice of climate, and making sure that we are all on a pathway to zero carbon by 2050 and beyond, if not sooner. Making sure that our investments are 1.5 degree aligned. And so there will be a lot of work required to be able to achieve that. This is not just about single level issuances on green projects. This is about understanding the shift that will be required. What is the road of travel for the high carbon intensive growth industries that we all still rely on and will need in the decades ahead? What are transition plans? How can we make sure that they are credible for businesses and for governments? And how can investors gain confidence that those sectors are truly transitioning? So we are very excited to embark on this journey with many of our stakeholders and partners, all of you, as we try to work out those complexities. But of course, a huge opportunity of opening the market for more and making sure that we really are achieving our climate goals. So I think we should be extremely feeling optimistic about what the next years ahead will give us. We have spent the last 10 years building a market, understanding the process, an education for us all on what we mean by green and what investments will be required. And this is really a success so far, but of course, a lot more to do. So with all of us coming together and working hard, we all have a role to play. I believe that we will see even more issuances of different labeled products coming in, contributing to the success. I think we will see much better clarity on transition and some really great investments in that direction. We will see more governments acting. We will see more investors being vocal. Of course, we hope that that's what we will see as we go into the years ahead. So watch this space. So thank you very much, Luxembourg Stock Exchange, for having me speak with you today. Although short and sweet, I hope that it gives your listeners and your attendees today a good perspective of where we're at. We've got a lot that we should be excited about.